And welcome to my channel Options Trader Today. So today in this video I will explain you how the price of natural gas has moved in the last week and how the price of natural gas can move in the next week. See, if you look at the chart of natural gas after 2020, it was in this particular zone. As soon as it breaks this particular zone, there is a huge volatility, and I've already explained you that if the price goes above a level of around $3.5, chances are very high it can go further upside. Okay, why? Because this level we have not seen has crossed after so long. Okay, this is the range, and once it started moving upside and it has crossed the level of 4.2, then it was very high that it can go towards 4.9, because these are the levels which has not been touched since long. As you can see, the price was from 2014 to 2019, it was moving in this zone only. Okay, as well as we have seen, when the war situation comes, the price of natural gas has moved rapidly with a volatile range. Okay, now understand why. If there is a volatile in the stock or any commodities, so what you have to do, what I teach in my workshop, that you can increase your SL and your target by twice and reduce your quantity to half. Okay, what is the benefit? That you can, because volatility, your target and SL both can be hit at the same time. Okay, so you can increase your SL and target by twice, so that your SL and target should be hit. It should not be hit so easily. Okay, but it can be, probability can be there, how the volatility is, so you have to keep your target as per that. Okay, so and there is a pattern forming in natural gas. As you can see that whenever it hits its previous high, suppose if this is the first previous high, so if when it goes for the second time, it makes a sharp fall, and this is being repeated for quite some time. Okay, so till the time it is not making a swing, because when it goes upside, it tries to make a swing, that is where it goes high. Okay, so chances are very high, if it form a swing at this particular level, then only we can see it can go further upside, and if it goes above a level of $3, then only we can see a probability of going further high. But there is a overall trend in the downside, so there is a probability of going further down. Okay, why I'm explaining all this? Because every video I explain you how the price of natural gas has moved for last long. Okay, I'm not telling you that it will go tomorrow or day, but in every video I'll explain you where the price of natural gas was moving, and you have to understand here that how the movement of natural gas was previously, weekly, and as well as monthly. Okay, suppose if the price didn't sustain, probability is very high, yes, it cannot sustain. Before we move it and explain you where the price of natural gas can move, if you have any doubt, you can mail me at stockmarkettradinglive@gmail.com, and one more mail ID in the description. Please watch the full video so you understand how this technical work, and a Telegram link I've given in the description, you can join that too. Suppose if the price didn't sustain this level, we can see it can touch a level of around $2.213. Okay, and if the price fall below that particular level, then we can see it can touch a level of around $2.089. Suppose if the price fall below this $2.089, chances are very high it can move further low, because this level is already being a weak support, so chances are high it can cross this particular zone and it can go further low towards a level of $1.867, and from there we can see a level of $1.647. Once it started moving below $2, then only we can see a level of 1.8 to a level of 1.647, and once it started falling below that particular zone, then we can see a level of $1.543, and if that level also move further low, then chances of going further down is there, and then we can see a level of $1.620, and then further if the price didn't sustain. Keep this in mind, once it started falling below $2, then only we can see it can move further down. But suppose if the price sustain this particular level, what we can see, because till the time it is not going above $3, we cannot say it can go. Suppose if the price sustain this particular level or form a swing at this particular level, then we can see a level of $2.496, and from there we can see it can cross a level of 2.7 and can touch a level of $2.8. Okay, and if that level goes further upside, then we can see a level of $2.842 to a level of $3.031. Suppose if the price move up that $3.31, then we can see a level of $3.314, and from there we can see a level of $3.5947. Okay, suppose if the price move of that particular level, then we can see a level of 3.9 to a level of 4.1. Keep this in mind, once the price move a level of 3.9, chances of touching 4.1 is high, and once it sustain this level, chances of touching 4.35 is there. Why I'm telling you? Because there is a gap theory, probability of going is there, that it can sustain this level and cross a level of 4.35, and once it sustain 4.35, chance of going further upside is there, and then we can see it can go further upside. Okay, any doubt regarding this, you can mail me. I've given the mail IDs in the description. Now understand that, see, most of the traders lose money because they trade in order to earn 100% to 100% in a single day. Even 30-40% is if your capital is more, you earn around 5 or 10% per day is enough. Even 1% is enough if the market is very volatile. Okay, but what they try to do, they try to make maximum of it. No, always make a 70% rule. That means, if suppose if you are in $100 profit or 1,000 or $100,000, once it comes to 70%, exit the trade for the day. Okay, that is very important. Okay, but if you try, suppose 60%, exit. Don't try to wait for 55%, 50%. Otherwise, you will wait for your full profit will be gone, and even capital can be gone. Okay, because the market will be volatile and your mindset will divert you from it. Okay, so you have to understand that. Okay, so now what I teach in my workshop, if you're trading, I teach fundamental as well as technical, and how the price action, how it works. Okay, so suppose if you're trading with $10,000, try to trade with 10 to 15% of capital per trade, and take a risk of 0.5 to 1%, that is $50 to $100. If you took 5 trades also, maximum loss will be $500. Okay, so suppose if you lose $500 when your capital is $10K, it will not affect your psychology. But if you lose 5,000, then it will affect, and you try to recover it, and in the process you lose full capital. But if you lose 500, you will relax, and then you can trade the next day for profit rather than recovering. This is what I teach, how to overcome all these things. If you want to attend that workshop, mail me regarding that, and we can work out on the timing. So hope you like the video, and if you like the video, please give a thumbs up, and if you're new to my channel, please subscribe.